Let's welcome on board Dinanath Dubhashi from L&T Finance Holdings joining in the show right now. Mr. Dubhashi, hi, morning. You've reported weak numbers when it comes to profitability after adjusting for, exceptional items. Also, the PAT, as I see, was impacted because of high provisioning in this quarter. What exactly is the profit growth that you foresee for the upcoming quarters, given that one is beginning to now see some green shoots for the economy?
First of all, that 225 crores of exceptional gain has been simply put into GS3 provision. So that gain doesn't come into the profit at all. And none of this profit is because of that gain. That has been straight away put into one-time provision of one old asset, and we have finished that. So that is number one. But that more important factors of this quarter's result is how this quarter's result should be looked at. As you rightly said, this quarter's result should not be looked at from any kind of trend or anything like that. It is important to see that how this quarter gives the idea of how future will be. Can we hope for the best from this quarter's result? And is the company preparing for the worst by this quarter's result? So if I can summarize, it is hoping for the best and preparing for something back to our economy once the moratorium is over. Let me explain. How hoping for the best? If you see this quarter, you will see April, May, June as three distinct months. And across sectors, but especially in rural, the uptick, if you take in disbursements, in collections, in GS3, in everything, you see the uptick, moratorium reducing, the uptick from April to May to June, as we have moved from lockdown to unlock, has been very, very good in rural and quite noticeable everywhere else also. And that gives us a reason for optimism as we go ahead.
Sure. You've also witnessed faster than expected recovery in the rural sector. Which are the segments that are showing signs of revival and higher growth? And also wanted to understand how exactly has the credit demand been?
Very simple answer. If we see the entire quarter, compared to the same quarter last year, okay, or the fourth quarter, all the growth will be negative, which is obvious. Because April was zero, May was hardly there. Okay? So if you look at quarter, everything will look negative. And it is very easy to talk about gloom and doom in the sector, environment, everywhere. That is why I am going into the details and looking month on month. So let me talk very specifically. If you take June over last June, the tractor industry has actually shown positive growth. Same way, our disbursements also to tractors are grown by 19%. 19% in June over last June. Quarter on quarter, it is definitely negative because April was zero. But June over last June, tractors has shown the first uptick, big uptick. Two-wheelers can be more, the industry was negative even before COVID. So
Mr. Dubhashi, share with us your asset quality outlook and trends that you foresee, because analysts are saying that your NPAs could spike for the next 6 months. From the customers that have opted for the moratorium, how much do you think this will translate into bad assets?
Nobody can truthfully answer that question, right? Because we don't know. But what you will have to see are trends, right? And the trends of moratorium, if you see customers under moratorium, right? I will give you very clear trends. So if you take micro loans in April and May, 100% of the portfolio was under moratorium. In June, that has reduced to 48%. In April, portfolio under moratorium was 75%. It has reduced to 18%, 18. Two-wheelers, it was 58 to 60%, that has reduced to 33%. Home loans, it was 53%, that has reduced to 33%. Right? So already accounts are coming out of moratorium. Then there are substantial number of accounts which were in moratorium in June, they are already paid in July. Right? So what again that we see, who can say truthfully that what will be the situation in September and December, how many of them will pay? what we can say as data is how many of them are already paid. And the reducing number of moratorium actually is showing that increasing number of people are paying, and it is early still, it is just 15 days of July, but we believe July numbers as we end July of moratorium will be even lower than June.
On your margins, because they did compress in Q1 on account of the higher funding costs, and despite ample liquidity, your credit costs too have remained elevated. So what is the credit cost guidance, and consequently how will that impact your margin trajectory?
The funding costs as such are not up. As you rightly said, there is ample liquidity. The funding cost looks up, and the margins look that they are down. For a very simple thing, that we are maintaining 9,000 crores of excess liquidity on the balance sheet, vis-a-vis our normal levels that we maintain of around 3,500 to 4,000 crores. So simply if you maintain 5,000 crores as excess cash on your balance sheet, that negative cash is there, and the negative carry for this quarter alone is 84 crores. So you just add it up, right? And you will see why the NIMs have reduced. That is why, you see, to your previous question, I put the order of magnitude of the pillars. Right now.
All right, we'll leave it there. Thanks so much for joining us this morning on the earnings, Mr. Dubhashi.